I would say that my biggest challenge was scaling up operation to meet market demand. We realized that it was becoming increasingly difficult to actually source inventory, and it was always due to the fact that working capital was limited. We had to increase supply base, and so we're buying more cashews from more farmers now. We've had tremendous growth, number of people that we have been able to employ and given good working conditions. We're employing young people and women as well. We're giving them meaningful employment, giving them relevant skills.
Transboat does 3 farms. We do poultry, we do maize farms, and currently yam farms to it. Due to lack of funding and financing, we were short of getting the feed additives, the seed that we distribute, and the fertilizing that we do. Bridge in Agriculture was given a single-digit interest rate. After receiving the facility, I've been able to expand my pens. Formerly, I have almost about 4 pens. Now I've improved to almost about 8 pens. Formerly, we have 45 workers, but after expanding, right now we are around 93 workers.
My exams now, I'm going to drink a separate. I say, my team exams na we. I say, me mama here bibi no frame ya. Me team nyama no. Me kura akwala ke to one. I say, me team share no bra. Le papa amfa bibi amba ye kra.
The process they took me through, within 2 weeks, I was given an offer, and that was my first time as a company accessing funding outside of my family and friends' means. Since the support we received, we've been able to increase our buying power, and for that matter, a lot of the youth within the community have gone into cultivation.
I'm excited to work at Ahunjo Farms. Over the past few months, Ahunjo Farm has increased its productions and we buy more cassava from the farmers. Currently studying on a scholarship from Ahunjo Farms at Ho Technical University, Bachelor of Secretaryship and Management Studies. In the next few years, I see myself to be a manager to help Ahunjo Farms grow and impact in others.
Kemono moto kinamoto kovena ogba la kake fifi me vale 10 kona ola ena nyefa agbele kekeleji fifi aka mele kovela o hena hana cash ena nyefa agbono no mekala be gban ta ena me pona nyefa agbele bo dedie ena na mo po nyefa pu me gbo pili ame ya ono do na mla agbele pili nyefa atike ya o mezana la agbele esike mono do ogba mla sike mo pa Ahunjo Farm ola ena na nyimete pona ga keke ovala onana me pona gbele na ha nyi o nyefa business a eleji ge ana maka keke nyefa gbele leji nyi.
The support I got from Bridge in Agriculture was about entrepreneurship, how you produce your products, the relationship between you, the producer, and the customer. Person with disability, finding a work is very difficult. So due to that, I realized if I learn this liquid soap and the shower gel, it will help me a lot.
When training in Belboame, I said, I may say I treat me customers, and they said, I may say I told and they said, I may say I am home. And I best sound boame, ama my treme jumani.
The training taught us packaging and then how to identify problem in a specific area before you bring up your products. When I bring my products from the suppliers, I have a very poor storage for them. It ends up spoiling. This training has really helped me to manage my product.
Edible Tree started in 2020 and we make chocolates and we also make cakes. The biggest challenge my business faced was expansion in terms of producing to meet our demand. We've been able to grow our team by having 2 new staff who are operating remotely, who handle our brands and communications and also our social media. We also have an intern with us who is with the University of Professional Studies. This has been made possible because we've been able to scale our production and increase revenue. Our vision at Edible Treat is to empower more women through sustainable agriculture. When you educate a woman, you educate a nation. So we believe that when we empower a woman, we don't just empower that woman, we empower a community.
Good afternoon. Good afternoon, distinguished guests, partners, and colleagues. It's an honor to welcome you to this high-level roundtable on strengthening Ghana's capital ecosystem to unlock SMEs growth. Today, we gather at a pivotal moment. SMEs make up over 92% of Ghana's enterprise, contribute up to 70% of GDP, and employ nearly 80% of our workforce. Yet, they continue to face a persistent financing gap, estimated at over 5 billion annually. This gap is not only a statistics, it represents the missed potential of thousands of promising Ghanaian entrepreneurs whose growth is constrained not by ideas or ambition, by limited access to the right type of capital. At this time, we are also operating in a fluid macroeconomic environment where interest rates remain high, foreign direct investment flows are cautious, and lenders must balance prudence with innovation. Yet, the opportunity before us is immense. Ghana has the talent, the entrepreneurial energy, and the institutional backbone to redesign how capital flows in the real economy. Now, what we need is a coordinated architecture that is inclusive, incentivized, and more resilient. This is precisely why today's discussion is timely. At Cross Boundary, through Bridging Agriculture Program, we see every day what becomes possible when the ecosystem work together. Bridge is a MasterCard Foundation flagship initiative that partners with banks, business development services, and technology providers to unlock affordable capital for SMEs, strengthen financial institution capacity, and equip young people, especially women, with skills they need to access dignified and fulfilling work. Through the program, the foundation is making $87 million available to a network of 6 banks to allow them to deploy up to 1 million to agribusinesses at 7%. After 2.5 years in, we've deployed about 33 million and impacted over 140,000 Ghanaians. Our work across Ghana shows that when we collectively reduce risk, align incentive, and invest in capacity, SME financing can scale much faster than many assume. But Bridge is just one piece of a much larger puzzle. Capital ecosystem include domestic banks, private credit players, institutional investors, regulators, development partners, entrepreneurs, and so much more. Each has a role in shaping solutions to questions such as, how do we mobilize domestic capital at scale and make it responsible to SMEs' needs? How do we adapt financing model so that they match the realities of SMEs, from agriculture to digital ventures to manufacturing? What is required to design FX-resilient instruments that restore confidence and crowd in global capital? because we understand that domestic capital alone can solve the SME financing gap. And finally, and critically, how do we reduce the cost of finance in a way that maintains financial stability while accelerating growth? We have in this room the leaders best positioned to tackle these issues: banking executives, investors, policymakers, SME operators, and experts in risk sharing and innovating finance. The diversity of perspective here today is intentional because strengthening Ghana capital ecosystem is not the responsibility of one single institution. It requires exactly the type of cross-sector dialogue grounded in evidence, pragmatism, and commitment to action. My hope is that today it will be more than a conversation, that it will be a catalyst, unlocking tangible pathways for collaboration, innovation, and investment. I believe that we have a clearer sense of a structural reform, financial instruments, and partnership model that can accelerate capital flow to the SME that power Ghana economy. Thank you all for being here. Thank you for your leadership. And thank you for your willingness to engage boldly. I look forward to a rich, solution-driven conversation. Thank you. With that, allow me to introduce Fanta Konde, partner at Cross Boundary, to lead the roundtable discussion. Thank you.
Thank you, Ali. Good afternoon, everyone. Thanks for being here. I know we've already lost 15 minutes or so we're going to get right into it. I'm Fanta Konde, partner at Cross Boundary and lead for the MasterCard Foundation Bridge in Agriculture program. So at this time, I will call my distinguished panelists to join me on the stage. And we'll start with Pearl Krumah, Managing Director, Access Bank. Next, we'll call Ishmael Ni Dodo, who is Head of Innovative Finance Partnership and Markets at 24 Hour Plus Economy Secretariat. Then we have Kwadwo Ajay Barwa, Head of Investments at Growth Investment Partners. Next, we'll have Samuel Yeboah, Chief Operating Officer, Ghana Incentive-Based Risk Sharing System for Agricultural Lending, known as GERSO. Then we'll have Charlotte Amankwa, Regional Head, Anglophone West Africa, Commercial Banking at EcoBank. Alfred Otto, Project Director, Precise Agro Processing. And finally, we'll be joined later by Ashwin Ravichandra, Portfolio Advisor at Meltwater. So today we'll engage in a discussion about strengthening Ghana's capital ecosystem to unlock SME growth, a topic we're deeply passionate about, not only at Cross Boundary, but within the MasterCard Foundation and across all of our partners and the different entities we have here of the ecosystem. Today, the discussion is going to be parted in 4 different sections. We'll start with mobilizing domestic capital at scale,
a topic that is in everyone's mind. We rely so much on international, external capital. How can we leverage capital that we have in-house, right? Next, we'll talk about adapting financing models to SME realities. We know there's capital available. SMEs aren't able to tap into it. Why? How can we improve that? Designing FX resilient instrument to attract global capital. I mean, we're in Ghana. FX, if it's not on your mind, then what are you doing? Okay? So after that, we'll go into the last topic, which is reducing barriers to affordable financing. Capital can be available, but if it's too expensive, it cripples businesses. In some cases, push them to fail. Given that's not the objective, how do we address that? As you can see, the topics are very timely and also very top of mind to SMEs. This will be more than a discussion. We have the panelists here, but we also have a curated list of attendees. Everyone, in the audience is welcome to the discussion. We'll have an hour or so of discussion among this panel, and then we'll open it up for questions from the audience. So please take notes, keep your questions. We'll get to that stage where we'll have that discussion. Once again, we really apologize for the delay in starting here, and I won't be talking too much because we have some time to catch up here. So let's get right into it. Okay, the first topic, as discussed, is mobilizing domestic capital at scale. And I want to start with you, Pearl. Given Access Bank's reach and your background in mass market and SME banking, what are the top 2 structural actions needed to channel more domestic deposits into long-term SME financing?
Hello? Okay. Wow. Thank you very much, and good evening to you all. Like you said, I think this conversation is quite timely. And for me, on the question you asked, I won't just look at it even from a banking perspective. So not to relate it to just Access Bank, but it borders on how do we make, how do we use the rich capital that we have as a country, and I think we do, towards the nice statistics that we discuss here in terms of SMEs, their contribution to the economy. I believe there are a couple of things that we can do. If even I look at it from a capital market perspective as a country, there is a Ghana Alternative Exchange that was created some years back just to ensure that domestic capital is used or give SMEs ability to access the stock exchange in a manner that can help them generate cheaper lending and cheaper funding through the Ghana Stock Exchange. So I believe incentives like this or platforms like this will help to be able to achieve access to the capital, domestic capital, to the SMEs. But I also think as banks, there's been a couple of things that, for instance, example, something that comes to mind that can easily be done is I haven't seen any SME-backed pension fund that is being used to support like diversifying SME lending or funds to SMEs. There have been some government programs at a point to ensure that domestic funds are used towards that engine of growth that we talk about. And I recall, I don't know if it's still there, forgive me, that even in the central bank perspective, saying a certain amount of, or any lending that you give to SME as a bank, you are able to have, or is it the reporting framework is quite different, or liquidity gaps, the liquidity structuring for a bank becomes quite relaxed because you are lending to SME. So I think these are some of the things that we can do to ensure that certain retained earnings, certain long-term financing, long-term savings that we have as banks can be used to channel to SMEs. But one problem that we currently have as banks, you know, that most of our savings are short-tenured and very transactional, which also makes it difficult. Hence, I was looking at it from an equity perspective instead of like the Ghana Stock Exchange, where you can then assess maybe a long-term patient capital using domestic capital. Thank you.
That's really interesting. And I think, you know, some of the points you're touching on, you know, calls on the likes of Bank of Ghana to relax some of their, you know, regulations or adapt it or just be more creative, right? So how can the broader Ghanaian banks just design inclusive banking products that increase formalization? Because one of the issues is, you know, SMEs aren't really formal, can't even enter the door, right? So how can we design inclusive products that can push to formalization and therefore increase credit-worthy SME pipeline?
So I think banks are already doing that. So for every bank that you go to, if you come to, for instance, Access Bank, it's quite clear that we expect that SME to be registered or incorporated. And this is also to ensure that there's a quick separation between person and the business. So these are the areas that we try to assist in formalization, because it helps us as a bank to be able to start doing the assessment and the preliminary checks quite easier. However, I believe that as a country, there's a lot more that banks can do. So on top of my mind, where the funds are being generated and where funds are being spent is ability to create a tool that will help us see what is going in and what is coming out. Because we rely a lot on what is coming into the bank, which is much of a problem now, because a lot of the SMEs spend and a lot of SMEs collection happens outside what is up in the banking sector. So for instance, Momo collection. A lot is going on there. So how do you use that data to tell a story in a manner that we can use to test that this is how stock is managed, this is how stock is used, this is the frequency of how ordering is being done. So based on that, this is the kind of data that I have. One big problem you have as a country is that the data is siloed. We don't have one central trusted system where I can go and use it to score an SME. So it can be formalized as incorporated, but so far as transactions and daily activity of this SME is happening outside what we will use to do the assessment or trusted space, it becomes a problem. So you normally will say, oh, I need your financial statement, but you cannot trust a bank, you can't trust a financial statement more than what is happening to what is coming into the bank. So for me, it's also harmonization of data. So for instance, if I go into how is the telco or where they are using the merchant using the form to collect, how is that harmonized when it comes to when the person comes to the bank? Is there a central system that we can create? So yes, banks probably should come together to establish a central credit scoring system that we can all trust. And then it can help us to reduce some of the risk that we face. I normally say that we don't have a lending access to capital problem in the country though, because every bank have targets that they want to spend on SME lending. I don't think any bank has met that. However, it's the access. How am I sure that this person, when I give the funding to, will bring this money back? How am I sure that this person is a 13%, this person is a 50%, just because of their risk parameters? And I believe that formalization, data harmonization, a central trusted system that then with that, we can then go back to ask for a certain accountability structures, maybe as a policy, to really be able to say this person didn't pay, and this is the penal stuff, and this person paid, and this is the reward. So there's a couple of things that we can do, but I think it's coming together to first find a central data source.
Got it.
It's also very clear.
I think you touched on a very interesting point of data analysis, and also the use even of AI in that. I think this is a topic that we hear everywhere, and it's believed that, you know, those that will make the great investments in data, you know, data management, data analysis, and use of data to generate some AI tools to help you do your work better are going to be the ones successful down the line. Let's just, you know, pause on that. Quite unfortunate that data and AI is in a section of what we discussed, but feel free to bring that in as you know, make your comments, right? So I want to move to you, Charlotte. You oversee commercial banking across multiple West African markets. We've heard some suggestions here, you know, very pertinent for Ghana. What regional models have successfully mobilized domestic capital that Ghana could potentially adopt?
Thanks, Fanta, and again, happy to be here. I'll just start off picking from some of the points that Pearl shared, because like you mentioned, one of the advantages is being able to pick up learnings from other countries. So she mentioned pension funds. Today in Ghana, the statistics show that we have billions in that bucket. Now, there are other countries that have started off with policy development. So from the pension frameworks, bringing in the regulatory point of view, all the way into actual implementation, such that different types of capital instruments leverage the pension fund pool. So let's make it a bit practical. Colleagues in Nigeria tell me that today they are live with regulation, which allows them to have investments using some of these funds into infrastructure, green bonds, and so on. So it's something that is working in a neighboring country, and we could further develop in here. Again, the target groupings then become the SMEs, which ultimately I think around the table we are looking to support. There's the bit around inflows, which would loosely term diaspora financing. So in some markets, Senegal, for example, have that opportunity where the remittance inflows that come through are structured, again, at the base of this is policy frameworks and guidelines, and they use that to fund longer-tenured SME-related funding. There's crowdfunding using fintechs and other enablers. So these are options that are live in some countries around us, not just in West Africa, even in Eastern Africa. The advantage is we are able to share some of these experiences. For a systemic bank like EcoBank, our role includes the thought leadership and sharing experience across with some of these regulatory bodies to enable us develop on it and build it as a country. So I would say, Fanta, there are opportunities, there are things happening in other markets, and our role, although traditionally as a commercial bank, is to say, look, our customers elsewhere are benefiting. How do we build on this and share? Those are the immediate thoughts that I'd bring to the conversation.
Definitely. I think, you know, some countries are more advanced than others. I think, you know, regional banks play a critical role in that. I mean, there's EcoBank, there's the Standard Chartered, so Stanbic, you know, there's so many of you guys. So I think you play a critical role in, you know, using your position and the view that you have to be able to drive some of these, you know, catalytic changes that are needed in the economy. So we'll come back to you, Charlotte. I want to switch gears and go to the private credit, private equity perspective, right? So Kwadwo, which domestic institutional investors are most ready to deploy long-term capital into SMEs, and what is holding them back?
Thank you. I think Pearl and Charlotte have both spoken a little about the pension funds as a segment. They're the ones that should be the most ready, given the amount of capital that they have access to, but also their tenors, right? So they're very long-term, patient capital sources that should match with what SMEs need. Yes, SMEs need some, 1 year, 2 year facilities, but they also need people that can invest in them for 5, 6, 7 years. And it matches with the investment horizon that a lot of pension funds have. So I think that's one example. Clearly, you also have the vehicles that they would then need to invest in, and a lot of those don't really exist. But using growth investment partners as an example, we have been created, purpose-built to invest in Ghanaian companies and to attract capital from the likes of, the pension funds, which allow us then to deploy to SMEs at relative scale. And I say relative scale compared to what a traditional private equity firm would do. So a traditional private equity firm might do 2 or 3 a year. We look to do 10 to 15 a year. So but we're just one institution, and you need 10, 15, 20 of these for there to be a real change in the amount of capital that SMEs are able to attract. Of course, the local private equity funds that also exist with local fund managers are also beginning to attract funds from pension funds, but there's quite we already do below 5 million personally, so we do between the CD equivalent of 500,000 to about 5 million. That's where we play. I think some of the things that would make it easier for other investors is some of the guarantees. So Gersel, obviously, you're at the table playing a very important role. We're in discussions with you around some of the transactions we're looking at. So that provides us some comfort when we're looking at agric. But then there are other sectors. So where are the guarantee schemes that look at manufacturing and look at some of the other sectors? They don't exist yet. But I think that provides comfort, certainly. You also look at the existence of, you don't invest and then go to sleep. So where's the technical assistance, technical support, business support that you can provide to these businesses to help de-risk them during that 5 to 7 year period that you're now looking at, or even 10-year period that you're now looking at? I think these are two kind of big things that would also help to de-risk looking at that smaller ticket size.
Got it. No, I think that's definitely, to be talked about a bit more, because it's like that missing middle, right? For the very large ticket, you have so much capital available, not only here, but beyond, right?
Exactly.
But then when you talk about, and then for what the banks are comfortable doing, you also have the banks, right? But for that middle, it's usually not that many players. I mean, platforms like GIP definitely are created to kind of solve that problem, but there's a bigger need.
Absolutely.
So I think it's definitely something we should keep in mind. Would you want to add a comment there?
Yeah, I think, thank you very much. The missing middle is an area to look at because, as you said, most institutions are looking at the big ticket project, the commercial ones, because of, cost of, running these, managing these portfolios. Others are also, the pro-poor, groups are also looking at the smallholder projects, how can they help the last mile actors and all that. The missing middle are more commercial, focused.
Right.
And our operation so far in Ghana shows that majority of the SMEs are the missing middle in that category. So I think it's an area that we should be looking at.
Definitely.
Yeah.
We'll come back to you. So wanted to go to Dr. Ishmael Dudu. The 24-hour plus agenda aims to expand productive capacity and export competitiveness, right? How can this national strategy be used to create an investable pipeline that attracts long-term domestic institutional capital into SMEs at scale? I mean, we can think export-oriented clusters or 24 hours industrial zone, etc.
Thank you very much, and good afternoon to everyone. And the conversation has been very insightful from Pearl to Charlotte, and we had my brother Kwajo and Samuel spoke a bit about it, and I think the questions that you posed have set the tone for this conversation in a very big way. So to preface, before I answer the question directly, the first thing for us to think about is that we're talking about SME working within an economy, and the economy that we have so far been working with have been one that we have seen tremendous import, controlled by 80% of our economy is about import. Less than 20% is manufacturing. So we have been working with SMEs who have the capacity to produce, capacity to be very productive, capacity to actually create wealth for themselves, but they never had opportunity because everything is dumped from them. So if you look at the food import bill, it's $3.5 billion per year. And of that, about $350 million per year is an import of offals of animals, intestines of animals, called yemwadie. And so if we run an economy where we import yemwadie, then really we are not running that economy. So what we try to do with the 24 Economic Secretariat is to really beg this question: how do we overturn an economy and make sure that what we eat is actually grown by our people? The products that we bring to the market are actually products that SMEs and others are actually bringing, and including the large-scale investors are bringing to the table. And to do that, we have to critically ask the question: where do we get the long-term, cheap patient capital? And how do we do that in ways that the SMEs have the capacity to absorb it, use it, create wealth, and be able to pay back? Thus far, I'm just looking at my sister pair. One of the things we heard was that banks don't like giving loans to Ghanaian banks because they don't pay back. But if a Chinese comes here with a business, they actually will get a loan. So much so that we now have an economy which is running to about $100 billion GDP. It's controlled by 3 to 4 countries which are external to Ghana. So our headache in building a 24 economy, an economy where investable capital is about 4.5 billion, and it's all private sector driven, to be able to run a ROI that will stretch a GDP to almost 150 billion, that we would run this economy, build this economy, and it should still be controlled by 4 countries that are external to Ghana. So we have to really deal with this issue of SMEs because they control our economy. So how do we do it? We believe that, number one, creating an SME facility, cheap patient capital will be very helpful. And we don't have to do it ourselves. We have to work with the traditional banks that are doing it. But we, as a government entity, quasi-government, wherever it will be in the future, to be able to bring in that capital, whether external or crowded in, because of our credibility, to then on-lend it through the banks so that the banks are liquid, that is patient and long-term for them to be able to lend. So thus far, we have an experiment with Badia, which is the Arab Bank for Africa.
Right.
We have so far mobilized 500 million USD, and which will be on-lended to a lot of these banks here. We are having conversation with EcoBank. I think we've had initial conversation with Access and most of the banks here. And they will be the one to on-lend. But then they have to do it in ways that meet the SMEs. So we're working with the Bank of Ghana to create an innovative product, an innovative financial product, which is held in a sandbox. And then you can hedge the forex, and it has forbearance to the banks. So that, because this is an innovative product and it has that forbearance, then they will be able to lend. But what we think is useful is to create a loan scheme or building some insurance with GESEL and other international insurances, so that the SME would then have that capital and they can access it with 3 to 5 years, to be able to pay back. But critical to that is the ability to pay, because the NPLs are a headache for us. So we have to try and tackle that aspect too, by creating an enterprise financing support, so that that can then be deployed to the SMEs to help them manage their books, be properly registered, and so on. Ideally, what we are pushing very strongly is that they will get into cooperatives or get into associations that are registered. We have self-regulation, which would militate against NPLs, so that we can be able to help them. Our entity is simply to de-risk this environment and create opportunities for capital flows to come in. I'll end by saying that, yes, the pension bank needs to be confident to live in our economy, because you can't bring in capital from other innovative sources if we don't show ourselves putting in.
Right.
And so the pension funds need to be better. And I think Charlotte's, you know, some of the ideas that she put on the table, I think is very important. It's one that's quite constructive that we need to do. We are engaging the pension funds to have this discussion to make them feel less risky about investing.
Yeah.
It also shows signals, you know, for anyone who wants to invest in. And then the last point I want to make is that, you know, we need Ghanaians to be comfortable to invest in Ghanaian businesses, as in stocks. We need the kinky seller to be saying, okay, look, you know, I will invest in, you know, some stocks somewhere so that I can build my capital. It's possible to be a carpenter and be a billionaire. It's possible to be a kinky seller to be a billionaire. I have met carpenters who are actually running American businesses that are very... So really, you know, the opportunity is really, really there. And I think there is money in the system, but we need to inject more liquidity to banks such as Access Banks and others, so they can create a patient capital for the SMEs. We need to support them to feel like, you know, they're actually business operators rather than doing what we call in Ghana, you know, so they really do the right thing. And I think the opportunity is here for us.
And one thing I would say is, if you build the right products, you wouldn't worry about NPLs.
No.
There are Ghanaian businesses out there. I'm going to play the SME advocate for some time, but the truth is, if you build the right product that is adapted to their, you know, revenue model, to their businesses, they will pay. The example is the Bridge in Agriculture program that we're running right now through all of these banks that we have around and more. There's Fidelity, there's FNB, there's Stanbic, there's Zenit, with Access and EcoBank. And we've disbursed, as Ali mentioned, $33 million Ghana City equivalent to date, and we have no NPL.
That's impressive.
Maybe one or two restructuring, but no NPLs, right? It's because the products are adapted to the SMEs, meeting them where they are, and you have great bankers as well, you know, deploying these products and also taking some of these risk measures. So yeah, definitely, definitely. And we'd be happy to talk more about that and help you in that journey. I think we can close this section, you know, and move to the next one, right? I think some great points were noted here. Hopefully in the public, you know, you're taking notes, you're putting down your questions, because we'll come to you to be able to elaborate on this a bit more. So let's move to the next section, which is adapting financing models to SME realities. And I want to start with you, Samuel. You've led Gersol's risk-sharing initiatives, right? What are the most practical ways to scale standardized production protocols across agribusiness SMEs?
Thank you very much, Fanta. Most of the SMEs operating in Ghana are operating in silos. What do I mean by that? The maize farmer in the north, who knows where he gets his seed from, how he selects his seeds, the agronomic practices that he uses, he decides to do it on his own. Though we have extension officers that support them, but what I'm saying is that we don't have standardized protocols that the value chain operators used. Take the cocoa value chain, for example. Everything is standardized. before you plant cocoa, you have to go to creek for the seedlings. Before you spray, you have to follow a protocol. Selling, there is a dedicated market. So a bank going into financing an operator in the cocoa sector, because of how well structured operations are in that value chain, banks will not shy away from financing that value chain operators. When you come to the annuals and the biennial crops, like the short-term crops, we don't have those standardized, protocols to follow. As a result of that, GESAL has begun something in that field, where we think that some of the value chains that we think they have potentials, we will conduct demonstration or pilot on how we have various protocols existing, but we will test and validate these protocols and have a unified, standardized protocol that will run right from input sourcing, agronomic issues, right to the market. We have done that for Chile, the Chile sector, and I think after the trial, most banks are willing to be part of it because they know all the businesses or the SMEs that are going to operate with this protocol and standardized protocols know what to do, and they will not make mistake. So what I'm saying is that for us to deepen more lending to these value chain operators or the SMEs, we should have a system like GESAL is doing to have standard protocol for almost all the value chains, those that we can, so that that will give comfort to the financial institutions, because they know the risks, inherent risks to those value chains have been dealt with, and businesses are going to operate with protocols that are tested and can work. They are going to operate knowing that there is a market to market the produce. They are going to operate with systems that once you comply, I mean, there is strong compliance and monitoring coming from those who have developed the protocol and those who have trained them to do that. So I think that if we can standardize our protocols and enforce compliance to those protocols, we can unlock more funding into the ecosystem.
Absolutely, and it's great to see institutions like GERSOLs, but also banks, right? Because the chili pepper, scheme or protocol you mentioned, I know Fidelity was quite involved also in that,
Bank too,
as Access
and most of the banks,
and other banks. So it's important that institutions like yours get involved beyond the surface. So trying, not just saying, I have someone coming through my door, can I give him a loan, can I not? But trying to understand the root cause of SMEs not accessing this financing and trying to fix down the value chain where the issues exist. I think that is quite commendable, and I think we'll need more of these type of initiatives to be able to see tangible change in the economy, right? Yes.
Can I contribute very, quickly to these? If you build an economy that is driven by agribusiness, for example, and which probably will be like 60-70% of our economy, and then it will turn to service sector. The protocols cannot be, to want to build it at scale. These protocols, we talked about standardization and so on, cannot be done at the level of banks or institutions alone, such as GESAL. It has to be omnibus and must be very, very revolutionary. So what we are doing through the 24 economy experiment, which I hope will become what the country needs, which I believe is what we need, is to organize production so that it can be transformed from where we are today to the bankable types of initiatives. To do that, we believe in two things. First, create the economic corridors for the various value chains. So through the 24 economy program, we created the corridors for maize, or the cereal corridors, vegetable corridors, the tubers corridors, and then the oil seeds corridors, and organize them around what we call agroecological parks, which is the production centers or the farms, and then industrial parks, which is where you do the processing. And in the agroecological parks, the players have been organized in two ways. You have the anchor farmer, who is a big-time multinational, who want to go into very large-scale production, say in 10,000 hectares, 20,000 hectares. And then they become the anchor, link them up to the cooperatives or the smallholder farmers, and so that the production is all, the value chain is started from selection of seeds, application of seeds, giving them extension services, other farmer services, all the way through harvesting, aggregation, and so on, and linking them to the market, addressing yields and post-harvest losses.
Right.
So this kind of ecosystem allows it de-risks the environment in a way, and then allows for investment to come in, because the market is very clear. For example, we know that we have $3.5 billion per year of market to substitute locally. Then if you extend it to West Africa, we are talking in excess of 3-4 times of that. All right, so the market is there, and it makes a lot of sense for anyone who invests in. And whether we actually take part of this market or not, we know that every year there is between $86 billion to $100 billion GDP, which is our market economy. So somebody's making the money, in a way. So this is why we have organized ourselves that way, and it is to enable banks and the private sector to take charge of the economy and manage.
Yeah. No, for sure. I think more of these ecosystem initiatives and collaboration among you institutions, I think, is where the answer is. I want to turn to you, Alfred. We've heard a lot from, funding institutions, entities that facilitate that funding, but I want to get the SME and the recipient of all of these, perspective, right? So, based on your operational experience, and maybe you can briefly tell us, about your business and what you do, so we have a bit of the context, right? But based on your operational experience, what financing model best matches the cash flow cycle of agro-processors?
Okay, thank you very much. I'm hearing ways like unlock cheap long-term financing. And should I be happy? Yes. But is that what is on the ground? I would say no. So we are in the cassava value chain and precise agro-processing. We are in the cassava value chain, and we started 3 years ago. We've done a lot of research. We spent 2 years doing R&D, trying to develop what works if you want to go into that value chain. We are looking at starch, ethanol, cassava flour, and animal feed. So how did we start? We know a lot of people have failed in trying to go into this value chain. So we did a lot of research, trying to know what made people fail. We are trying to put a lot of science behind what we do for us to understand how do we become successful. So for 3 years, we've just been doing R&D. So we started R&D by partnering CSIR to go into research to develop the right cassava species for us to plant. We have 12 that we are working with. So whichever area we go, we do a pilot. We do between 1 month and 15-month pilot to pilot the 12 species that we have after doing our soil research and all that to know, because you can have a species that do well in a Kumfi, that's where we have our plantation, and that same would never do well in Afram Plains or whatever. So whichever land that we acquire, we do a pilot with the ones that we have developed. Then we partnered with CSIR to develop our planting materials. You don't plant anything anywhere. First, you want to take diseases out of the product that you have. So now you know what you are getting at. We are looking at yield, we are looking at starch content, we are looking at how long can I have that particular species in the land, because we are trying to, the end game is to get to manufacturing. But to feed the plant, you have so many species. If I'm looking at yield, which one do I go for? If I'm looking at starch content, which one do I go for? If I'm looking at, because when you start harvesting from 12 months, you go up to 15 months. There's some species that will do very well in the 10th month, but if you keep it longer in the soil, it will rot. So we have to synchronize everything, right? So you move from R&D to piloting to plantation. We started our plantations. We started in November because we need to meet. Yeah, mainly we've not gone into irrigation yet, so you have 2 seasons, the minor and the major. So by the end of November, beginning December, you should finish the first stage. Then we are looking at doing the second plantation in March. So we have 500 acres of planting materials clean. You multiply by 10, you have 5,000. We are looking at the 5,000 acre plantation, but you start with the 500, you scale up. By the time, so you do 200, you get 2,000 the next season. You do 300, you get 3,000, which will feed the 5,000 that we are looking at, okay? So we started research, piloting. Now we've started the plantations. Now you get to the stage that you ask, where is the financing coming from? You go to a stage that you need finance. We started your program. It took 5 months from one documentation to the other. Then at the end of the day, somebody said, when I have started my plantations, you don't need working capital. I said, wow, that's nice. Which company doesn't need working capital? I'll give you equipment. I said, fine. When you give me the equipment, I have to put in fuel. I have to get people to man it. I have to get farmers on the side to plant. You need to maintain the plantation till the time that you are ready to go. So if you are telling me I don't need working capital, then I don't understand it. Fine, I'll give you tractors. I said, fine, I'll take the tractors, because I know next cycle from March, I'll need those tractors if I want to do the next 300 acres. So we changed the whole documentation from working capital to equipment. We got to the end of, I don't feel comfortable, I can't approve it after 6 months. So I like all the words. Today, I think I have to unlock. With the people sitting by the table, if I don't unlock today, I don't know when I will unlock. So when you get on the ground, it's a serious conversation to have.
Yeah.
We have various stages of SMEs. We have pre-revenue. You put in all your business models and everything, and at this stage, somebody is telling you, you don't have revenue. I don't know how to answer that. After submitting the stage, everywhere plantation, I know when you plant cassava, it takes 12 months before you can sell. So if you are having a conversation at this stage where I'm planting and you are telling me I don't have revenue to support my application, I don't know what kind of conversation to have. That is one. So you have SMEs at different levels. You have pre-revenue. You have the ones that have inventory. You have the ones that, in our case, that we need suppliers. You need to buy equipment. You need to do stuff. You need suppliers to supply you to be ready to run. Everything in this is cash and carry. We went to the district, 24-hour, I'll tell you. The district have tractors, right? And it is more expensive to get it from them than to go and get it from the private person. Yes. Because if you don't own them, you need to hire and use.
Yeah.
So there are various levels. So how do we make, like the question, I'm coming back to the question that you asked.
Yep.
We can't put all of us in one basket. We are at different levels. So when you look at that level, what kind of financing, and I like the cheap long term, very nice word, to unlock. If you see me at the stage where I'm pre-revenue, what can you use to make my cash flow better? There are some, maybe I might have 1 or 2 tractors or equipment or something. I have land, I have the plantation. And some people don't even visit the plantation. And they tell you I'm not comfortable. So if I was having a conversation with Charlotte and I told, look, when I get hot and I corner my wife, I say, look, I need some money, help me out. I start a conversation on Saturday. By Monday, she'll bluff me small. By Tuesday, he give me cash to go and continue. It took me 6 months for 10% of how much we have invested. It's frustrating. Then you don't want to go have the conversations anymore. Because the delays will come in, you get to the tail end of it, and we can't do it because I don't feel comfortable. That is one. So at pre-revenue, what support can you give us?
Right.
What can you use? At least the plantations are there. Then we have stages where we need supplies. Can you use free us? Don't give me the money. Give me the equipment. If you feel I'm going to use the money, maybe to buy cars, no, don't give it to me. I need tractors. Because I need to get the land ready to plant. Give me those equipment, but in a way, I think you free some money for me to be able to operate on some of the areas. There will be a stage that I have inventory. Can you use my inventory as collateral to give me funding? So we have to look at all those models. There are different models that we can use to free us, because it is not easy. It's difficult when you're on the ground and you don't know how you're buying your next fuel. To power the equipment that you have rented. So I think we have to look at the various models that can help us. Do I have receivables that are logged? Can you give me funding based on that receivable to unlock cash for me to operate? So I think these are some of the things that we can look at to get the unlock.
Got it. No, thanks for that. Let's clap for him. I think... I think just to wrap that quickly, I think I'm hearing 2 things, right? It's availability of capital for SMEs at different stages, right? We were talking about the missing middle. That's like one, gap. I think what we're hearing here is like, we know banks are well set up for entities that have a track record. I mean, even for the program, we have at least 6 months of operation, and that's because, banks kind of need that based on their model. But where is the capital for those that are just starting, right? And how do we use innovation and that creativity, whether it's asset-backed, receivable-backed, to make sure that products are available for the likes of, precise agro-processing. I think that's a point. If we're pressed on time, so a quick 30-second to 1 minute follow-up to that could allow.
Right. Thank you very much, Fanta. I think that is where guarantee schemes come in. We have got to the point where we cannot continue with the traditional, lending systems or models. Again, sometimes there is information asymmetry where the financial institutions are not able to interpret the viability of the businesses. That will help them make an informed decision whether to lend to that business or not. And I think Gesa's scheme, where you can use our guarantee offer as even collateral to support lending, and our technical assistance that is able to assess these projects and look at the viability of the project, which of course, even if it's a greenfield and it's viable, how can we help lend to that business? I think these are some of the things that we should be looking at.
I want to turn to the bankers. Pearl, Charlotte, any reaction to that? We're here to discuss and kind of co-create even together, right? And at the end of the day, if banks aren't set up for it, then who is, right? I think that can be the discussion. But what is your reaction? We can start with you, Pearl.
Yeah, so and it was exciting listening to you, and I like the fact that we come to the table like this, and everything that we're talking about, we can actually now look to who and why we are having this conversation. So thank you very much for that. I think before Alfred started talking, I started looking at the fact that the ecosystem players we need to help the unlocking or the strengthening, we are all on the table. And for me personally, this is about I'm getting to the point where I say I don't know who I met in SC. I don't want to sit in table this again because it's getting too much. And it's getting too much because we are not bringing a particular use case where all the players who are solving the SME problem come together to solve it. It's not only banks. And that's normally where we struggle because either the SME is coming to you when he's in dire need, or when he's ready, I need it now, when he's not prepared. And anytime most SMEs enter the bank, the assumption is the money is there. But the other players that says, I'm helping, I'm incubating, I'm guaranteeing, I'm training, I'm doing it. How are all these players coming together to build a comprehensive use case? And that's what I love about Bridging Agric, because it wasn't a program that says, do it alone. We combined the players, and I was part of the initial conversation where it thought as if it won't happen. And it happened, and now you are talking $33 million. So is the collaboration and not leaving it to just one institution. In Access Bank, we capacity building in a particular year, we spent almost $5 million to $10 million as part of our capacity building programs that we do. We've partnered with Deloitte on taxes. We've partnered with so many different companies. But sometimes you even struggle to get the customers to come for you to build the capacity. You build tools, it will not be used. Why? Because you are a bank. Yours is to give me money, not to build my capacity. So we need an authentic conversation and executable actions by all the players who are formed to help him. And we all work, and we also all hold him, for instance, accountable. I like policymakers' conversation. There have been a lot of things that we've spoken about. What are the things, which use case can we say that this is the situation where the players work together? It has worked. We have seen the multiplier effect. It's being paid, and we go on to the next session.
Absolutely.
So for me, that's what I would say.
And I think one point there is even information sharing, right? How does Alfred know where to go first for what, right? And within the ecosystem, but even within the banks, right? There are some guarantee products. DFIs are always providing guarantees. Does everyone within the bank know that these products are available, that they can represent it even to the customers, right? So I think information sharing is also one great point there that we need to solve, right? As an ecosystem, but also looking inward and seeing how do we make sure that what's available is known by everyone. So when Alfred walks in, relationship manager X can tell him, well, you may not qualify for this, but there's this scheme that could apply to you. Over to you, Charlotte.
And I'll say that, picking from there, the most interesting thing from Mr. Otu's submission hits two areas that I think as banks, we still have an opportunity. One is understanding. And when I say understanding, throughout the institution, you talk about frontline colleagues, all the way to people who are assessing the numbers that he will share. The good thing is that banks can do one of two things. We will typically, based on understanding, give you an answer. And I think that's to do with the information sharing. If it's this stage of the business or this need, and there is this solution within the bank, we are happy and able to quickly share same. I think that's the least to start off. Second thing is helping SMEs to understand that the biggest link is always to cash flow. I think that as an industry, we often have SMEs thinking of the ask for collateral. So all the different stages that Ms. Otu talked about, at each point, even at that starting stage, there can be demonstration of cash flow. And I'll give one example. The cassava is planted. It's 12 months down the line. And when we were chatting earlier, my first question was, what will happen when it's ready? So it can be a new, but there is clarity on the offtake. That is where the cash is. Then the bank takes the decision whether I'm happy to wait for 12 months because a certain entity that takes this product at the end of it and is credible with the cash flow can help. So there are many solutions today within even the commercial banks. The next thing is for us to prove to him that there are those opportunities. He's thrown the challenge for us to pick up on from here.
I love the engagement. You all have 30 seconds.
Yeah, 30 seconds. So the other thing that, and I like your scenario again, you know, I'm echoing the points our colleagues have made. The other point here, though, is China has given Ghana zero tariff, you know, export, and they need 100 million metric tons of cassava flour per year. Your production will probably be 2,000, 15,000, I don't know. Where are the other players that you can also congregate into some kind of a corporate or cooperative or, you know, aggregators or whatever, that can then provide economies of scale for you to pull together to raise these funds and to get things going. So it's about, we find out that, you know, most of you tend to want to go alone, whereas you have to be able to scale up together.
Yes.
30 seconds.
Yes. One of the things that the banks ask, who is the off-taker? But then it goes back to the information discussion that we are having. If I know that when I finish that product and the off-taker is there, he's telling me now China needs that. So where is the government coming in? By telling us, look, we are able to produce, we buy. I'm trying to get a dryer. Now I'm having a discussion because now I'm thinking of, even though I'm like 12 months down the line, I'm thinking, how do I get this 200 acre out when I start harvesting? So I'm thinking of a dryer. I'll dry, get it into chips. Then there are a lot of ethanol factories that needs, like you are saying, China. If I want to export, I will export. But I have to also be comfortable to know that when I have that out, somebody is going to buy it.
Right. Right.
You see? And banchi for fufu is too much. Ghana will eat 70% of the cassava that we grow. Fufu, kokonte, gari, whatnot. But that is not what is going to make the... if you are talking of 24-hour economy, I can't work 24 hours and just produce for people to eat as fufu.
Yeah.
We need to get, where are we going to? So we need to have that conversation.
For sure.
To know, once I know, it's gone off.
Right.
When I get it, sorry. Let's go on.
I think the point is made. No more 30 seconds. We'll move. We'll come back to you.
Yes,
we'll come back to you. But I think what I'm hearing is, and this is why these forums are here, right? I think hopefully, and we'll come back to that at closing, we hope to have concrete next steps and actions from here, right? I think the point you made around China wanting to buy, I mean, it's news to me, right? It's perhaps news to him. It should be out there, right? But out of that, and you talked about wanting to create like creative models for SMEs, I think, you know, being an off-taker to then, you know, generally just, you know, sell that to China is one avenue, right? So let's keep this discussion going. I think these are all great points. I want to turn to you, Ashwin. Welcome. Joining us from MEST Africa.
Yep.
So I think even pertinent to this point, right? Let's turn to tech startups, right? Not a round table, but tech startups are also part of those enterprises, SMEs needing capital, right? They have unique asset-light models, right? How should financier adapt products for each early stage or digital SMEs?
Yeah. So I think first of all, it's a lie that any tech business in agriculture is going to be asset light, right? Sure. If you're involved in agriculture, you will be getting into the asset space. I would say not in the first 3 years, but definitely in the first 5 years, right? Versus businesses like Toto Tractor, which was one of the first agri-tech companies we invested in, was 100% asset business, right? And that's one of the reasons why also the pickup was pretty slow, right? For us, I think where we're sitting today, I think what we look at, and I think this probably ties to what everyone is saying, you know, pre-revenue, traction. Tech comes in to build a very fast prototype, right? And the thing about agriculture, what is required is either on the production side, you need to get inputs to the farmer as quickly as possible, or on the sales side, you need to get people to sell as fast as possible, right? Technology can only play that part. Like technology coming into the actual production is again hardware oriented. You need to probably do a lot of stuff with the land. Like I think with Complete Farmer, we're trying a lot of different models right now. But because of that, if you're able to show value in any of those value chains, or if you're able to show impact in any of those value chains, generate maybe like, I would say like 50 to 100K US, you'll find VCs like myself eager to invest, right? And again, VCs like us, we don't typically follow bank, I would say, financing mechanisms or, you know, GIP or any of the other players where I think it's a little bit more structured. We try to go after the business, the gut, the person, and then we try to see how we can also invest, right? And again, VC is also known to be probably the most legal form of financial gambling today, right? So at the end of the day, I think for us, it's what we've seen is quick prototypes. This comes from Toto Tractor, AgroNova, Complete Farmer, Farmerline, AgroCenter, all of them, right? First 1-2 years, built basic tech, got the farmer to adopt, then use that to basically try to figure out how to sell or do input financing. Like AgroNova sits on the input side, Farmerline sits on the input side, Complete Farmer sits on the sales side, AgroCenter sits on the sales side. Just do those really fast and really quickly. And then you can think about production on your own capacity. Then you can start looking at, you know, start doing some blended forms of finance. So I think that's what we're looking at primarily now when it comes to tech businesses. Okay. Quick prototype, quick proof of concept, but also something which will satisfy the bankers on the table so that they actually build that is, right? That they can actually invest in it and fund it and stuff. So.
Right. So, you know, following up from that and thinking, you know, learnings from one model to the other, right? And we've touched on this a bit before, like which innovations, whether that be revenue-based financing, ecosystem guarantees, which of those innovations could take root quickly in Ghana, even beyond you know?
Yeah. Again, I'm not a finance person, I'm an engineer and operator, so I do not know any of the financial terms, but the one financial instrument which I'll probably say is required is something which is patient. Okay, because agriculture has a variable which no one can control because none of us are God, which is weather, right? So as long as weather has an influence on agriculture, there needs to be patience with that. Because there is a very high chance the farmer might fail that season. And we've seen it across all our farms. I'm sure Sir has seen it. I'm sure GIP has seen it. I'm sure even the banks have seen it, right? A farmer comes and says, it went, right? So you want to be very patient. So I do think ecosystem guarantees are a good way to introduce, I would say, low risk, like anything between a ticket of maybe like 10 to 50K, maybe. That's like, I think pretty doable about an ecosystem guarantee because then you get more time and you can like patiently do it. But I think when it comes to more revenue-based financing and stuff like that, you've got to prove what you have, right? Like a bank is not going to come and play with you if you're making 100K. That's no incentive for them. You're making $1 million, then let's come and talk. And then we can actually see how it actually works, right? So, yeah.
Alfred, 30 seconds.
Right. So you mentioned that in agriculture, is the weather. It's not the weather. Because when you have a control system, you can farm all year round. And what is the control system? The control system is having your irrigation and everything in there, which you plan, but it needs money. So once we have the financing, if we want to meet that 100 billion or whatever target, it is not relying on the rain.
Right.
We now have to do 2 cycles, now and March, because we need to target that. But if I have the funding, I'll plant all year round.
Okay. Yeah.
Just to add to his point, and this is 20 seconds, is that agri-tech involves use of technology.
Right.
And one of the things that really will boost productivity and increase yield is if you have the technology to have precision farming.
Right.
How much fertilizer should come in? How do you regulate your irrigation facilities?
Right.
Using AI or drone facilities to do this irrigation. GIS remote sensing to really check the health status of them. And these are things that are exciting. That really must get into the tech space. And then market, connecting one from the north to the south, letting people know what is there, and connecting all of these into the, so there's a lot of things that can be done in the tech space. And as I said, we no longer have to be rain-fed agriculture. We can grow year-round using technology to establish that control.
Right. One thing with that is it comes at a cost. So I think when we see ecosystem builders, I think those are, I'm coming to you next. Those are areas where, we should think about investing, right, for the ecosystem so that it's easier for Alfred and the likes of him to, take advantage of those technological advances or have access to these off-takers.
For Africa so far, of these technologies is $3.2 billion per year. And that data is not empirical. So it could be larger than
You have all the data. I think we just need
important.
to put it into, tangible actions, right? And I know you're already starting with that and looking forward to continue there. Back to you, and I think we'll end this section because, or else we won't have enough time. We'll end this section with you, Samuel. We just talked about risk. Ashwin mentioned is weather. Alfred's like it's not weather. Then where do banks most frequently, or just financial institutions, right, misjudge SME risk, and how can risk-sharing tools correct these biases?
Because of time, I will summarize it. I have a lot to say there.
I'm sure.
Usually it's true. Banks misjudge. And like the conversation is going around key issues, sometimes you can't blame the banks because somebody who hasn't done much in agri, get to an SME who hasn't got information about the business. How can the bank make decision to lend or not to lend? So that information gap is a real issue. Because of lack of information, that most of these businesses don't have around their operations, it's difficult. The banks they usually misjudge whether the business is viable or not viable. Also, there is a perception about the agri sector. We all know today, a farmer will tell you it's because of rain. If it's not raining, then it's drought or it's disease. So the banks usually look at this and they usually shy away from lending to the agribusinesses. And also, let me talk about collateral dependence. I think now it's quite changing. Otherwise, a bank will say you need to have a 125%, 120% collateral cover before they. But with GESAL in place and MasterCard, of course, that has reduced that requirement. And so they misjudge sometimes because we believe that sometimes you need to look at the viability first before collateral issues come in. And also, it's already mentioned about the long-term, short-term issues. Banks usually will go for the short-term, facilities. Yes. Now, how do we come in? How do we support? Already, GESAL is there. I talk about the collateral. You can use the guarantee as a collateral. We also advise the banks using our technical assistance pillar to explain other alternative, collateral systems that could be used. Whether you can use biological assets, for example, a tree crop. The trees are there. If it doesn't fruit this year, another year to fruit. You can use the trees as a biological asset to lend. You can look at the assets that you are buying for the business and all that. We are also capable of using our technical assistance pillar to train the banks to be able to understand the cycles, the structure of these businesses. And also, we are now encouraging the banks to look at the tenure of the project to be considered, rather than saying, I can only give you funds for only a year, if the cycle of the project shows that it should go for 2 or 3 years. I think these are things that we are doing. Because of time, I want to summarize by giving some offerings that GESA has to help this conversation. You already know that we are offering training in collaboration with National Banking College to support the FIs to really understand all this that we are discussing, and also to look at how to structure the businesses, how to monitor the businesses, and how to originate. We even have a portal, knowledge portal, that the bank staff can use to, help their businesses in terms of the origination. Now, we also realize, even from this discussion, we all know that the agribusinesses also have issues because they don't understand the requirements of the financial institutions. So we are coming up with, we have the training curriculum ready. We are just looking for partners that will partner us to be able to train these agribusinesses or the SMEs on financial literacy. That supports, that will help them understand what type of records to keep, what the banks are looking for in terms of, their assessment and profiling their businesses for support and all that. So we have a training coming up for the SMEs. So that at least the supply side and the demand side will not come and sit like we are sitting here and we are trying to blame somebody. Once you know the requirements that the banks need to give you money, I think you position yourself to be more bankable. I think that is what you are doing. Thank you very much. I have more to say, but
I'm sure there'll be, and we have a networking session after this, so I think there'll be opportunities to exchange with different people. Just to keep us honest on time, we have a little bit over than 20 minutes, and we promised 20 minutes to the audience for questions. So we have about 2 short sections to go through. Let's keep it crisp, concise, to the point, right? Any other way I can say that? I don't think so. So next section is quite interesting and quite important for Ghana. It's designing FX resilient instruments to attract global capital. And I'll start with you, Kwadwo. What blended or structured solution would give foreign investors confidence to return to Ghana's SME market at scale?
Okay, thanks. I'll just use GIP as a quick example, and hopefully it covers everything. So we are a platform company of British International Investments. It's a UK-based DFI. What BII agreed to do was to take local currency risk. Okay, they're giving us, or they have given us $50 million, and they say invest. If a company earns CDs, invest in CDs. If it earns USD, you can invest in USDs. But we're here primarily to provide local currency capital. Whatever return we make is what we give back to them. Another DFI has signed up to do the same thing at $15 million. So I think the conversation is some of these international companies, DFIs, should be taking that view. If you're going to help support local businesses, you shouldn't be passing on FX risk. So I think that's a very important point. The other thing, Doc and I were speaking about this before we started, is that there is actually enough money locally. And if that money is not supporting local pension funds. If local pension funds are not investing in SMEs, why should a business, a pension fund that is outside, come and invest in your SMEs? Absolutely. If you don't believe in your own SMEs, I think it's hard to make the case. So once again, we need to be able to mobilize local capital to make sure that we can attract some of that money as well.
Great. And how do private credit and private equity funds evaluate currency risk differently from banks? And what policy solution can bridge that gap?
I think so. One of the things, obviously, is with if you take private equity, they're looking at the exit. So they're more patient. They have a longer time. So they're looking at who would want to buy this business in however many years, and what is the macro landscape is going to be. So that you're relying on what you can get, a few years down the line. So it's really around the tenor. So we then hope that we have a macro environment that is stable. If you're projecting for, 4, 5, 6 years, what are you likely to get, in terms of return in 5 years? The banks are looking at what is the rate going to be tomorrow,
Right.
and where your cash flow is coming from. What kind of US dollar cash flows are you getting now? How can I hedge and make sure that my collateral is still going to be enough to cover the loan or the exposure that I'm going to have in a few years?
Got it. Thanks for that. I'm moving quickly, but I think you hit on all of these different points of believing in our own economy, making sure that we are ourselves internally investing, and relying on these type of platforms as GIP and other type of DFIs trying to do the same thing. I must highlight that when we look at Bridge, the MasterCard Foundation through Bridge is doing the same thing,
Absolutely,
right? It's
yeah.
giving 87 million, but that's converted to Ghana City. And the liability from the banks is that converted amount. So no FX risk being passed on to the bank, therefore none of that being passed on to the SMEs. The more we'll have platforms like that, I think the more catalytic will be to SMEs, because it's a huge risk to carry and can definitely overnight just put a business in the ground. We'll finish with you on this section, Doc. How can the 24-hour plus economy, institution with your export-driven agenda be leveraged to structure FX earning SME pipeline carrying less currency risk?
Right. So some of the solutions we've already preferred, and Kwajo talked about that. The other thing is, having the sandbox arrangement with BOG to make sure that, the FX is hedged. And then the SME facility, though we onboard it, as a forex currency,
Right.
it will be passed on in the local currency. So that is not given to the SMEs too. But then the other aspect is trade facilitation, because if you are to export, then forex is coming in, and some of the manufacturing SMEs, they may necessarily have to import some raw materials, because if you are in a pharmaceutical space, for example, it's not all the APIs that you do have. You have to get some of them outside and then you process. We're talking to a lot of those who want to go into the cosmetic manufacturing space. Quite a number of the materials that they need have to be imported before they make they can make their and then export back. So we believe that one of the ways to do this is, in the lending space, we create specific products that are very contextualized to these particular circumstances.
Got it.
So that we understand them, we know what they need, and then how we can do it. Some of the solutions could be, that you're going to export, some of the payment have to come overseas. You can direct part of the payment overseas to pay for the raw material that you're going to import for the next next season. So we have to be very creative about doing that. And we need to be able to co-create these solutions with our banks, because I think things are different and things require a lot of creativity to get things round.
And as we wrap this section, yes.
I may, because
Sure.
I think there was a comment that Samuel made when we started about the standard protocols and the same criteria that we use for Cocoa Board for us to start bringing it into other.
Right.
So, for instance, I know cassava, for instance, Tias or something, I've forgotten their name. It was a Chinese company that was in Ghana to help be the aggregator for cassava to export starch. So on your question, I'm asking myself, the Ghana Commodity Exchange.
Right.
How? And I like 24-hour economy. But sometimes there are some platforms that we have not exhausted its potential and we have not tested enough.
Yeah.
That I believe as a country we shouldn't also take our eyes off
Yeah.
because it will help.
Yeah.
So what can commodity exchange
Yeah.
really and buffer help in terms of even becoming that warehousing for international suppliers who have pledged their foreign exchange and all those. So it tends to solve some of these issues and also give that buyer trust and confidence in the agriculture. So
Absolutely.
I believe that, Dr. Ishmael Dodu, maybe we should look at some of these projects or some of these initiatives and make sure that we continue to run it the same way that we want to run maybe new agendas that we come with.
No, for sure,
Yes.
for sure. I think to wrap this section, one thing I'm hearing a lot of is it requires a lot of intentionality, a lot of like looking in the detail, trying to like, you know, be creative, etc. And we talked about AI initially, right? So I think important for everyone to realize how much work and human, you know, assistance and kind of intervention will be required unless we think about AI potentially to support in these processes. Because the truth is, just applying the same, you know, requirements or the same solutions won't work. The true solution is in being very flexible, very creative, and being very adapted to like each of the realities. How do we do that quicker? How do we do that better? How can we use technology to help us leapfrog there? So just a thought, not only for the panelists, but for the audience, right? Let's move to our final section, which is around reducing barriers to affordable finance. Obviously, we'll turn to the bankers first and, you know, take it, you know, as you wish, in the order you wish. Pearl, Charlotte, interest rates average around 35%, right? What specific levers can immediately reduce the cost of SME capital without compromising asset quality? Because Alfred needs capital, but not any type of capital. Like you give him interest rate that are too high, it can cripple him, right? So what can we do there?
Okay. Yeah, I can. So I think a couple of the answers have come through in the discussions. I would say that pricing is always, for banks, a reflection of what is the real or perceived risk. Okay, today, thankfully, in our industry, we are lending at subpar 20 because of where rates are. The key solutions lie in the source of funds. Across the table, we've discussed some options around blended finance. And today, that is where the solution is, particularly in sectors like agri. No commercial bank can easily fund that sector patiently with just internal only generated funds. So some of it's privately arranged because you don't also want to put all DFI support out there publicly. There are some mixes that are done unadvised, but blended finance enables us to support particular sectors at rates that are lower even than GRR. At the base of it is what we discussed earlier, the information sharing. So at the end of the day, players in agri or green, newer sectors know that there are banks that can support. And I can share for EcoBank that is what has helped, you know, some of the funding that we are able to do. Partnerships over decades. This is 20 years plus as a bank, both locally and abroad or foreign partners who have supported to fund. So I would say the biggest lever I would share for today is blended funding from another source, and the bank adds theirs, and that way we bring the cost of funds down. Now, Fanta, the question or comment on NPLs is very key. You notice that for the first time, we are at a point where we are working towards something as benchmark for the industry. So it goes two ways. The more we perform as SMEs, the lower the pricing becomes. That's the last comment I would make.
It's storytelling. It's about putting that story out there that we can pay and we will pay if you give us the money.
Yeah, Yes, thank you, Charlotte. And to add, and where she ended, in terms of managing the risk and helping us to also go into places like agriculture and areas where we believe that we don't really have that patient capital and we don't have the expertise, but at least we need to test. In conjunction with blended financing is also the risk sharing. So some of these risk sharing initiatives helps us to say, okay, if I know I was going to sit with 100% default versus being sitting with a 50% default, at least let me test it.
Right.
And that is what is helping banks now do a lot of these new areas, moving away from the ordinary or what we are used to. So, and I must say that banks are now also very open to source this financing to help clients. So we're no longer looking at what I'm generating just so that I can price high. It's as much as possible, how do I price at a very lower areas so that I'll be able to support the SME and our customers. So we are really open to a lot of DFI collaboration, whether in a blended finance, thematic funding, or we are using risk sharing activities. Besides that is also investment in building the capacity in ensuring investor readiness. Because at the end of it all, how do you generate the cash flow? How do you make sure that it's channeled into the business, it's generating its own cash flow to the extent that you might not need the financing at a point, unless probably for expansion process. So I believe that capacity building initiatives are also very, very key. And we work with a lot of bodies, a lot of companies to ensure that we are able to do that as well.
And that's blended finance in itself. I'm coming to you next. That's blended finance in itself, right? Like DFI is coming in, using that concessional capital to allow for training, capacity building, investor readiness for SMEs. That in itself is blended finance. So I think we're hearing a consensus there. The solution is blended finance, and its value is quite high to unlock. Right? So let's keep unlocking. Over to you, Mr. Samuel from Gerso. What would it take, and let's wrap with this, right, to bring agricultural loan pricing closer to single digits, similar to some concessional schemes, that we know of?
Thank you. I think that is exactly the point I wanted to make. What constitutes the pricing is the base rate and the risks. The bankers here will bear with me. That risk component would be relooked at, or will reduce if the portfolios are performing, right? So once we have healthy portfolios sitting with them from agri space, the pricing will definitely come down. For the base rate, sometimes it's an economic, issue, so you cannot do much about that. But the margin, which involves the risk component, can always come down if the agri portfolios are doing very well. And what is GESA doing? As I said, we are supporting with technical assistance. Currently, our MPL, we also have MPL. The claims that we paid is less than 1% over 6 years. Less than 1%. It's 0.3% of what we have guaranteed paid as claim. So if banks should be having such an MPL level, I think they will look at the margins that they put in. And of course, definitely, if the base rate comes down, the interest rates will also come down.
Great. Quickly.
Yes. I will try to be very quick, but I think this is also very important for everyone. The first, to pump capital into the system, long-term concessional loans. So the example is the Badia, which is $500 million, which is coming, is really to be onboarding. But actually, an idea is $1.5 billion. So this will then become a revolving fund. So this will free up some of this capital as a blend financing to really keep it our target is much lower than 10%. But see, the other one is also working with BOG to really look at the base rate as well.
Great.
It has to do, there are some innovations that can carry on there. The third one is looking at innovative financing. Ghana today can benefit from green climate finance that can pop in some more money for impact investment. And most of the SMEs programs that we do have are actually impact investing, if you look at a lot of them. And EcoBank is a member of the Green Climate Fund. So having more of that. There is also carbon credits financing that can also come on stream from some of the work that we do. There's also ESG financing that can come in. There's impact financing I mentioned. So there's a wide range of innovative financing instruments that we would want to pump into the ecosystem to lower the investment. The challenge is always, which I believe we'll get to, is the use of proceeds. Because not many, I mean, we are talking about substituting $3.5 billion kind of food security, food import bill. But then the question you ask is what is our capacity to produce? And so that's also that question. So as much as we bring in the financing, the use of proceeds side had to be properly developed. We need SMEs to go into the space. I'll give you one example. Somebody wants to grow the cereal, maize, to supply to Nestle. He doesn't have adequate farmers from Ghana. Another person has off-take agreement for yam. Raising the mounds, they have to rely on Burkina Faso guys to come and raise the mounds for yam. So over time, because of our import, we have lost our ability to grow, to do things. So reconstructing a new economy would make sure that we have to get people back into the business to do things. And that's also a risk.
Absolutely. Over to you, Alfred. Two last questions. We'll go to Alfred and then Ashwin, and we'll open it up for questions. We have a minute each, if possible, so we stay within time and make sure we don't lose our audience. What would be the point of discussing just among us and not hearing from the audience, right? So quickly, Alfred, where in the current financing process do SMEs face the highest cost burden? Is it collaterals, delays, FX exposure, from your experience?
All three.
Okay.
And then if I want to rank it, I put collateral first.
Okay.
And the cost of funds.
Okay.
Cost of funds, collateral. Then the delays. Now, I think the delays have been reduced because now you can have online application and the rest, which reduces
some
the delays.
Progress.
Yes, that one. There's some progress.
Some progress.
There's some progress there. So I think that's the way I'll rank it.
Definitely. Yeah. Thank you for that and for keeping it brief. Over to you, Ashwin, to wrap it up for us, right? And I'm glad we're ending on this because back again to data, technology, AI, etc. Right? So Ashwin, being in the tech ecosystem, how can digital tools reduce onboarding, monitoring, and credit assessment cost to make small ticket lending viable?
I think the answer is pretty obvious. I think there's already many organizations doing smallholder farming, lending. I think India has a great model. Bangladesh has a great model. I would say right now Thailand's also adopting a new model. So I do think that for Ghana specifically, and we've tried this, bringing in non-Ghanaian solutions here is detrimental to the process. People need to take the effort, and I think everyone here on this table is equally motivated. Like, yes, I've lived here only for 12 years, but I'm more Ghanaian. I feel very Ghanaian. But I think if all of us actually come together to actually build out a solution, which might not work out for all players at the start, and this goes to the banks primarily first. Like, we'll have to start small, right? I think it's actually very easy. And I think there's already a lot of existing, companies doing it. And if they can figure out some sort of, I would say some sort of like legal, escape where they can share data with us, or they can sort of give us redacted information where you can build a model on top of it, I think we'll be doing a lot of benefit to the ecosystem. And I think we can also go to GIP to understand, investment landscapes. We go to the government to get what are the new opportunities. we go to Jersol for the technical assistance. There's enough players today who can actually come together to create a model. And it has to be developed for Ghana, by Ghanaians, with the Ghanaian economy in the mindset and context. Because to put Ghana on the same level as India or like any other, it's like comparing apples and oranges, right?
Right.
You can't do that.
Right. Absolutely. Thank you for that. Thank you for ending so beautifully. Thank you to all the panelists. I think, your interventions are all great. At this point, we'll turn to the audience. The idea is to get questions from the audience. We'll have 15 minutes, unfortunately. I promised 20, I'm giving 15. Some progress, So yeah, let's, I think we have mics going around. Please ask your question. Say who you are, your name, entity briefly, and then what your question is. We'll probably take 2 to 3 questions and then try to answer them and do that twice. There's one hand raised here.
Okay, thank you. My name is Alex Ejampons. I work with Fidelity Bank, and we are one of the banks that are working within the consortium. I have 2 questions. One of them probably will be a comment. We all look at the SMEs expanding, and we are looking at employment generation. We are looking at helping to impact on the economy. And I wonder if we give anybody a short-term facility of 2 to 3 years, 4 years to pay back, what kind of capital investment they can make with that kind of lending. If we are looking at expanding the production engine, actually, then we should be looking at a long-term lending, probably looking at 5 to 10 years payback. But what interest rate? If you want to give somebody thanks to the current regime where Ghana reference rate is now around 19.5, and even that, if you add a margin to it and you are talking about, say, 20%, in 5 years' time, that facility would have been doubled. And how do you expect the customer to be able to pay back? So, like Per indicated, collaborating and using blended financing approach will be one of the ways to go. My brother, I've done cassava financing, and I've learned a lot. I'm a banker, and I should have been in that space. But I'm in that space because I had a lot of belief. We had off-takers. The first batch, when under 10 months, we went to test and see if we could harvest. And we saw that even though it was not ready for harvesting, we've started seeing the roots have started rotting. So we had to rush through and harvest them. The second round, bushfire. So that is basically the 2 first batches that we are supposed to harvest. Factory was ready. We were looking for cassava to process for starch because we had orders, and we couldn't. Now, this is where my question is. I think it would have been good to have a regulator, Fanta Puabi, on the table. Financing agric is not typically like financing a typical commercial trading activity. There are a lot of restructuring, a lot of if you don't get the harvest the way that you expect, you need to touch it. Now your regulator have a different view around restructuring, and immediately you have to make provision. So if I don't do it, what do I lose? If I do it and provision will hit me, then why should I do it? That is when, if you look at it, the MasterCard Foundation program comes in handy to provide the support. So I think as a government, if we are looking at supporting SME in general, things like GESEL must be replicated in other areas. Initially, we heard about DBG guarantee coming up. We don't know what is happening to it now. The 24-hour economy secretariat rep here, Doug, if you can help us, what is the future of DBG guarantee to help not only, GESEL is taking only agric and agric adjacent business, but what about other areas of the SME? And then what conversation can you also have with the government, the regulator particularly, as far as agric financing is concerned and the provisioning management? Thank you very much.
Thank you, Alex. There's one here.
Thank you very much.
And we're taking notes to answer the questions, right?
Yeah, I'll
Great.
prefer to stand. My name is Amos Bentir. I'm with Social Enterprise Ghana and one executive director for Mishap Cashew Farmers. And so the question has to do with we are training a lot of youth in agribusinesses who has this potential, this knowledge to start good business that will, produce some successes. But now our bankers are saying that they want to see proof. Is it a way that you as a bank will want to go down to these people, give them some support, training, give them the money to go into whatever they want to go. You monitor the progress of it to the level you can start picking your, returns. Then the other question has to do with what Dr. mentioned in terms of the cooperatives. I think what the discussion here is very important, but when you go to the grounds, I am a farmer, is not what we see there. Most farmers struggle a lot even to go to the bank or any facility to access money. It's a challenge. And so we may have all these plans here. Some of the information don't even get to these farmers. So sometimes the discussions that we have, I wish is something we can have it at a lower level where those who are doing the work can get the knowledge and apply it. Then we probably have this a discussion. Maybe the person who is going to this farmer does not even farm. But he has the knowledge, he has the information. The person who is doing the work doesn't have it. So there's a big gap here that I think some point the government, in terms of policies, need to regulate certain things to allow even the banks to give some, credit to these farmers. Not thinking of the high risks, but also making sure that they can come up to this level that they want them to be. Thank you.
Absolutely. One ask if we can keep questions to questions and very short. That way we can get more questions, please. We'll take 2 more and then we'll answer them.
Good evening. Good evening, everyone. My name is Nani Marfa with Dama NCA. We are financial fundraising advisors providing support to companies and startups looking to scale. My question is around mobilizing local capital, particularly the local pension funds. I want to hear your thoughts around securitization. You have made mention of low NPLs on your loans, and because of the MasterCard Foundation is implemented through the bank, so therefore the banks probably have low NPLs in terms of your program. Is there a way that we can probably structure these high-performing loans into a security, an SPV, to now tranche it and sell, maybe the higher risk tranches to the pension funds? The pension funds are looking for diversification. Following the DDEP, they're hit hard by their high exposure to government securities. So now looking for asset classes that will help them diversify their portfolios. This allows the pension funds to now participate in the SME financing, diversify their portfolios. The banks can free up their capital to continue to invest. So it seems like, a win-win for most parties, right? So I just want to hear your thoughts around securitization in order to mobilize local capital into the SME financing space. Thank you.
Okay, great. I think there are a few questions online. This is a live stream event. So maybe Ali, Amos, can we read 1 or 2 of those questions and then we'll answer them?
Sure. Let me read one that came here. I think we may need to understand the unique challenges to each player in the ag space, especially processor farmers and exporters, and also read the policies upcoming that can shift the space.
Okay. All right. So I think we can take those questions. Please jump in. I know there are some to 24-hour economy, to the banks. Okay, one last one. 30 seconds.
Sure. John Chikatana with Pangea Africa. We're a business advisory service provider. My question is to the panelists, how are we doing on building the pipeline of bankable, investment-ready SMEs? it was great to have the word from Alfred, an unvarnished story of how his process has been. And I know we have Eden Tree in the room, and there are the stories of the SME side are really important to tell. How are we doing in helping those first of all, identifying the promising SMEs, agri-SMEs, and then helping them to access the right form of capital?
Thank you.
I think there are just so many strong ones out there. When we can talk about Bomars, we can talk about AgroInnova, we can talk about Lion Agro, Mariseth Farms, Lion Oyster, and so on. But are we doing enough to really prepare them and build that pipeline that will be attractive to the capital providers? I would say perhaps there's more to be done on the demand side for capital than on the supply side, and the relative effort that we're giving to the two. Perhaps I'd love to hear the opinions. Should we reconsider the ratio of support that we're providing on the demand side versus the supply side of capital?
Great, thank you. That would be all for the questions that we'll take. We'll go back to answering them. I know there's a few to the banks, engaging the regulators. Can we, basically incubate SMEs? So yeah, please jump in. We have 5 minutes to answer the questions before we wrap. Go ahead.
I'll try to start with Amos. I skipped Alex because he's my colleague in the industry, but for social enterprise cashew, I think the key answer I would say youth, supporting youth who are going into farming. It's a real need. For a bank like EcoBank, it comes back to what is our skill set, what are we able to do? So banks like us identify where we are able to support and do it well. The solution for that type of entrant or youth in agri linked to the capacity for a bank like EcoBank is positioning how we get the funding to them. So in some models, we would solve by supporting at the next level above them. There's an aggregator, there's a cooperative that these youth farmers will then be under. And the advantage is it also helps them then to learn as they go along. And the bank is able to support logistically as well. Within the EcoBank structure, for example, there are models for youth banking, models for women-led and women-run, so women in agri. And then at the micro level, a subsidiary Pan-African Savings and Loans. So in summary, a bank positions solutions based on capacity and uses at different angles to solve. So there are solutions even for youth in agri as well. That's what I would add.
You're on.
So thanks, Charlotte. So I'll try to also add a bit to our colleague's question, which also ties into the securitization that he spoke about. And like I said in this conversation, is how as players, we come together knowing that we are solving for a common goal. And then when we put things or discussions together and we have a clear execution plan that is not trying to solve in isolation, knowing that what I do here will impact what the pension funds can do and how we bring a pool of funding together to probably make sure that regulator also understand to the extent that it's not just about restructuring or giving us a certain leeway, but how do we come up with special purpose vehicle to kind of securitize some of this lending so that we can be able to be more agile in the agriculture space. So I would like to say that maybe let's have another conversation where cross-boundary, you're already leading the path, help us to have that after the lending conversation in terms of our Greek, so that it gives the banks that flexibility, that understanding, and it gives also confidence in the supply side to say this is how our capital is being invested and this is how it's protected. With that, probably we'll be able to take something to the central bank and say for this particular industry, this is how we should do it. So we have all these players in the room who are trying to have the same kind of solution. So we should collaborate together to do that. So that's what I would say. I think one more on the banks, back to the social investment. It's also some of the work being done by fintechs in the VSLF kind of space. And currently, we believe there are micro-lending agencies that if we take them to the closer to where agriculture is happening, backed by banks, we will be able to solve for the youth and the people in the rural base. So it's also another conversation that we can pick up. So that will be all for me. Thank you.
And on that, I just want to add that we regularly engage Bank of Ghana. They are curious, they want to know, what's going on. I think one thing that needs to be clear in their position as we try to work with them to influence or do one thing or the other, they make it clear their role is to regulate and make sure that, the banks aren't more exposed than they're supposed to be, right? So I think just keeping that in mind, definitely there's more we can do, and we as cross-boundary and leading the program are definitely open to lead all of the banks in structuring an approach to the regulator.
From John, I think Pangia, on the
SMEs.
the pipeline of bankable SMEs.
Yep.
It's a lot to share, but things that Pearl has talked about in terms of capacity building is one of the biggest, because in the numbers that we touch, we are able to start preparing them. But the greatest wins, at least from the experience on the EcoBank side, has been based on partnerships. There are some entities that we are dealing with who the SMEs, especially at the early stages, are very comfortable engaging with. And the bank partners them. Example, we are working with AFAWA. The types of women in Agri who were introduced to EcoBank through AFAWA relationship on our own, we couldn't immediately touch. But the partnership with those entities give us the solution. The question on capital demand versus supply is an interesting one. And I agree that there is room to bring the matching closer. But the journey each of the banks in here are on, I think, is the start, to solving that bit as well.
Great. With that, we're going to wrap this session. I want to thank every single one of you for your time and for being here today and your great contribution to this very exciting discussion. I wish we had more time, but unfortunately, we don't. But we do have a cocktail after this where you'll have the opportunity to continue the discussion, but also engage everyone else in the audience. On behalf of Cross-Boundary and on behalf of the MasterCard Foundation, that is leading and making possible the Bridge in Agriculture program, I would like to thank you once again, and I hope that the discussion that we've had today is just, I won't say the beginning, because there's been many discussions, going on to the point where, there's fatigue of that. So I hope it's just going to be, a continuation of discussions that were had, but one that will lead to concrete next steps. We've heard some potential collaboration. 24-hour economy is doing a lot, has a lot in store in the short time that they've been around. I know that there's already a lot that they have planned. They shared some of that. Are the banks going to be discussing with them and see how to progress something, right? Are we going to collaborate with you to kind of share some of the learnings from Bridge, right? Alfred shared kind of his experience, right? And I think based on that, there are some gaps that we still have to improve, right? On our end, when it comes to Bridge, I think the timing is one that was highlighted, right? Like, what are the actions that we're going to put in place to make sure that we address what was discussed here and that we move forward the discussion? That's what I will be looking to all of you, to see make happen. And we talked about accountability, holding SMEs accountable, holding the financial institutions accountable. Let's hold each other accountable. And I can tell you that this is the first of many discussions like this. So stay tuned and look forward to our next discussion. Thank you all very much for being here today.